This is the Nightly Strategy Podcast, Friday night, January 20th, 2023, weekend edition. We'll start with the sniper trade of the day. We're looking at Alcoa on 3-minute charts. Here was yesterday's close. Here's the gap down opening. This blue box represents the opening range 3. The second bar opens here, takes off through the high of the opening range 3, so we are long with a standard risk box here. There's our entry. And we're looking for a move back into yesterday's closing range in here. Okay. We get that move right away. And before everything crashed here the first time, I was in this little consolidation area here where we're holding 2R. I was concerned about where to put my stop to lock in that nice gift move right off the bat, here or here or here, and neglected to put a 2R battle drill automatic entry here, which would have capitalized on that decisive move to the upside. So I found myself, rather than trying to chase and put a second position in, I just was content with marching this up with 2-bar lows. And by this time in the trade, where it peaks here and then sells off to the low of that bar, I'm not offended if you take that exit right now, or if you just lock in that 2-bar low and give it that little wiggle room right there. But what you want to make sure is that you've locked in basically 4R on that first burst. And so we're only really going to argue about this extra little wedge right here. Check or hold. Now we notice that we're still in early days of the Four Seasons. Yesterday's move closed really poorly and gave you a winter all the way down, which peaked here. We didn't get the spring till here. So even as this is rolling over, we're still potentially in early days of this move to the upside. We have just moved into the spring on this first leg, so there's hope for more. I believe I was using the 2-bar low on this one. No. I waited for a breaching of the dragon. In retrospect, I would prefer the 2-bar low and have exited on this side of the dragon. I think this was me being overly optimistic. We got that sideways congestion here, and then it failed, so that gives you the plenty of reason to get out. So you've got to decide how you want to manage that exit, because really the PSAR got left behind. This was such a powerful move right off the bat that the PSAR was not able to accelerate enough. The problem with increasing the acceleration factor on the PSAR is that a lot of times, if this had been just a grinding move, the PSAR might have knocked you out too early. So we just know that if you do get this kind of condition where you have that original smashing upside move, in order to lock in that exceptional gain, you're going to need a management rule that allows you to accelerate. Even if you just use something as simple as a 1R trailing stop, you would have probably gotten out right about there. So that's not a bad move after 2R in hand, to just go ahead and install a half an R or a full R trailing stop. So we're about 4R on the first one. I guess that's about 3R. I had considered strongly the short position here, because now you can see that the summer move is over and we're through the dragon and we've flipped the PSAR and we're in the fall, you'd be justified in taking this as a short position. I was so impressed with this that I elected not to, but that's a legitimate position. And then your risk box would have been something like this. The same standard risk box here that you're using down here. Okay? That trade would not have lost money, probably would have scratched. Um, I'm playing the long side on this one, so I am noticing this formation. There's the price taking out the PSAR and the RL10 going through the PSAR at the same time. So I take that entry with a standard risk box. What would we call that pattern? Kata 2, our continuation pattern after a successful trade and then a higher low as measured by the turning point in the RL10s. Notice that we're back in the winter, and right about here, we're already back in the spring. Now, I want you to notice we get prices right at the previous peak of the RL10. So this is a really important test area. I consider that to be a critical state. It's either going to fail back to here, and then if it fails below there, I can think about a collapsing dragon to the downside. Or it may go ahead and resume to the upside, but this is really the test area right in here. So what I don't want to do is have my stop back down here and let a full 1 hour trade come all the way back to break even. So it's by this time that I'm thinking I need to get my stop higher than my entry in order to lock in this little wedge of gain. My no lose plus dinner for 2, and then you can decide how much of that move you want to retain. You could make the argument that this bar here that has a close higher than open, you could go with a 1 bar low if you wanted to lock in that much. Nothing wrong with that. And any move higher than this PSAR flip and the peak of the RL10, that's where it's going to be very interesting. So we're looking forward to that. So you're simultaneously being open to the possibility of a reversal and locking in again, or having a runaway move on your hands. So now it turns back into the summer, gives you a quick move, double top, RL10 rolls over. I'm not offended if you take that exit right there at the edge. You have a nice move in here, and so tracking that with the edge of the dragon would get you out here. You might also pick the spine of the dragon, belly of the dragon, or even just the no lose plus dinner for 2. But you got to decide how many of these little wedges do you want to lock in. So tell me, where would you put your stop? 1, 2, 3, or would you cash it at 4? Yeah, I'm seeing lots of 3s and 4s. I agree. So the skin of the dragon holds. It's able to recover, but now notice that it can't break above that previous peak. And now you get this little consolidation, and now the timing function of the PSAR just squeezes you out right here, and that's a reasonable exit for about 2R. For 1 unit of risk, you get 2 units of reward. So that's not a bad exit. Now, we're not really seeing the price fail, but it's not following through, and that's information. But now it follows through. It takes out the previous peak. So I'm long with a standard wrist box. So what would we call that pattern? Again, we've got higher lows. Yeah, I think you could call this either a Kata 2 or an emerging dragon. It's really both because you're playing the fact that it's got higher lows and that there was no failure, but you really are waiting for it to break out above that. So I accept either one of those answers. Now the move is kind of grinding. I want you to just notice the evolution of price action. That first leg after the gap down was explosive. And in the space of about 5 bars, it moved 4 or 5 R. The second leg, that angle is a little bit flatter and the peak is not as high. And then the third move is much more grinding, and that little surge of power only goes to here and is grinding. So you can feel the energy leaving the station as we're now moving towards the afternoon. So by this point in the trade, you would not have been wrong taking that as an exit. If you haven't, you probably want your stop right about there, and you want to preserve this much. You would love to see it take off higher than that. That would be nice. Momentarily, and then the PSAR cracks, and so we're able to squeeze almost another 2R out of this thing in the grind. So 1 unit of reward or risk, 2 units of reward. So not too shabby. But again, what I want to bring to your attention is the real difference in leg 1, leg 2, and 3 in terms of the steepness of that curve. You can think of this the same way we think of the slope stat, in which, the trade, if it was just going sideways, the angle would be 0, and then a really nice move up, that angle theta, the steeper up that angle is, the better. So that might be an A trade, a B trade, a C trade. And then somewhere in here is some threshold that if it starts off performing well but then starts to decay, you got to decide how far down the stack you want to let it become before you just lock in your gains. And so that template allows you to classify the moves and helps create the disinterested relationship. You want to have a little emotional wall of protection so that you can be looking at that through your lens and saying, all right, what kind of a trade is it? The more you spend time connecting it to a theoretical framework, the less personally and emotionally committed you get to those trades, and then you're able to be dispassionate or disinterested in the particular trade and realize it's just one trade towards the next one of the next 1,000 trades. And so you want to trade well by your rules through that whole series of trades and not get overly emotionally committed to the trade there. And so this kind of lens to look through helps you create that wall of separation so you're not overly emotionally attached. I had considered the short here, especially when it went to winter. But I was already looking at the afternoon, and this was one of the stronger moves, so I didn't really want to participate in that. So I let that one go. I did take a little speculative one here, one final like Kata 2 continuation play. But that one I think failed pretty quick, if memory serves. Yeah, and that felt like enough, and then it closed out for the day. So we got 5 or 6 hour on that one in Alcoa. It was an early mover, a strong mover, and was a well prepared trade. The sniper trade of the day. All right. Let's see. Here's our 30-minute SPY. So yesterday was the end of a two-day sell-off, and then closed with right in this little PSAR flip, and we're treating that as a compound critical state. Were we going to see this kind of a move, or was it going to fail down to the 10-day low? And this one turned out to be a PSAR flip, and after just a little bit of weakness, actually had a pretty strong follow through. And on the 30-minute, the spring turned to summer and closed 2/3 of the way up the stack and closed very well going into the weekend. And I consider that to be a pretty strong sign of a good close to the week. It recovered from this short side weakness, and if we look back, the support level held. And in retrospect, we would say, oh well, obviously it would hold. But the key is that I had identified this as this PSAR flip as the critical state. That was the uncertainty zone. We would want to be short if it was below that, long if it was above that. And then this was the kind of a day that we had. Okay. Going into next week, any breach of this around 400 is going to be a very positive sign. So it's just a tactical trade in here until price proves that it can get through this significant resistance area around the psychological level of 400. Anything north of 400 next week is a very positive sign. By the same token, if I saw this thing roll over and break the PSAR at about 391, that would be the first warning. Then the bottom of the 5-day, 387, and then look out below. So this was actually a pretty favorable day. It was stronger than I was expecting, to be honest. When we look now at the daily SPY on the daily chart, we're noticing this kind of Kata 2 action. The sell-off tested the PSAR but did not flip. The RL10 is still in the winter, or still in the summer, and this little recovery really looks better on the daily, and we're very close to breaking out of that 10-day high at 400, and then 410 is in play for the next leg up. So this all feels actually much better than it did yesterday. On the 150-day look back, this little sell-off almost doesn't even register. It just, the PSAR held and it closed very well, and we're ready to break out. And then the 30-day highs up here at 410 to get us all the way back to 430. I just think this price level here right at 400 is significant, because you see a strong resistance level here and all the way back in here. And in both of those cases, when price could not penetrate, you get the big sell. So we're going to be mindful of 400 as a resistance. That was a premonition of that sell. Now it turned around and did well, which is nice, because now this feels like potentially that if it could hold here, that we might be having this Kata 2 discussion in the very near future. So we're in a tight little tactical box here, and breaking above 400 is going to be good. Failure below 390 would be bad. And then on the downside, our first target would be here around 375 and then 360. So this is a compound critical state with a slight upward bias based on how strongly that closed today. our 3-day. So this is the SPY on 3-day bars. And this really makes the Kata 2 clear. And 400 is in play, 405, 410. So that actually feels pretty good. It's been a while since we've seen that formation, since previously these are all lower lows. And that downward, this is the, like a head and shoulders, right, inverted head and shoulders that is now trying to break out. But now you can see that it's got to get above 400 to be really interesting. On the 9-day bars, so this is our longest look back. This was the onset of COVID, that long recovery, and then 1, 2, 3, and hold. Here was our PSAR flip, and now the lows are trying to make those rising lows. The PSAR is still holding solid. The RL10 is in the spring, and it is pulling away from the PSAR. So there is a little bit of upward push on this thing. And again, here's on the 9-day, those guys will be excited if it gets above 410. 400 is next, and then 410 would really be the signal that this thing could go. So this is what a healing process looks like. That double bottom feels important. Noticing that it's taking longer to come out of this sell-off, this grinding recovery, as opposed to the panic sell-off of COVID. Now that really attracts everybody to the fire sale, and then plus you add $10 trillion of cash, and you get that. And now it's just back to normal and a little bit harder. Welcome aboard, inflation. In the daily charts, looking at the regression lines, we've been tracking this for a while, how this upward move has helped the RL270, which is this one here, to go from a downward trend to flat. And then the next one, the RL90, which makes this double bottom here, turns and is moving up. And now we're seeing that pulling away. The 90 is pulling away from the 270. So that's actually a positive sign of that intermediate term and long-term momentum shifting. You see that also reflected in the higher lows that the MACD histogram is making. And we just have moved into the summertime on this. So that actually feels pretty good. And now again, we just got to get above 400. Now the RL30 has definitely made the turn. Should do that in black. So that RL30 is the health of the trend. Look how nice and smooth that tells us what the health of the current trend is. The blue line is the RL10, and that's price, and we treat the 30 as the health of the trend. And so now you can see a very clear Kata 2 picture. And then this moment right here is the owl entry, because you have the sell-off, you have the RLXD, regression line crosses the dragon, and then the dragon rolls up and the RL90 or the RL30 rolls up. So that gives you the confidence of the owl for the entry. So this is good grinding upward motion, and we'll know something when it gets above 410. Take a quick look at the sectors today. And from a distance, we'll notice our S&P, as usual, right in the midpoint of our tactical set. Almost everything was up today. Here was the cut line between winners and losers. NVIDIA, we're going to look at the semiconductors first. NVIDIA was strong. Intel was strong. Texas Instruments was the weakest one, so NVIDIA still has the juice. In the metals, we have Alcoa, Cliff, and U.S. Steel. So all three of those were better than the S&P. So the metals as a sector are doing better, whereas the semiconductors are really differentiated by individual company. So that's more of a tactical play. The semiconductors are indifferent with respect to the market, but the metals as a sector are making a move, and that's good. And you'll notice that XLB, which is the metals sector, is better than the S&P. So that sector's giving the metals some juice, and the metals are doing better. And I really like Alcoa and Cliff in this case. Tesla, our little special, had almost plus 5%, so much better than S&P and better than tech. Ethereum, really nice recovery, 9% today, back above 850. So we're going to see some strength in Coinbase, Ethereum, Squarespace, Robinhood, PayPal. So all of the financial disruptors had a really strong close, and that's going to add a little more fuel to the narrative that crypto is recovering from the SBF fiasco. Okay, so let's zoom in and take a look a little closer now at the winners and losers. We'll start with the losing positions first. So again, here's the S&P at 1.86, strong finish. Lumber, finance, Mexico, oil, residential real estate to just 1.24. Then the next big chunk, the other lumber, staples, the Aussie dollar, blended commodities, wheat and precious, marijuana, silver, agriculture, and Brazil. That was the cutoff line. So this right here is all the defensive plays. You know, the commodities-based things that, whereas, even treasuries were underperforming. Whereas above the line, we're going to have more of the traditional growth or aggressive plays. So again, the S&P here. So you got materials, archgenomics, commercial real estate, consumer discretionary, biotech, S&P tech up to 2.7, along with the Qs at 2.7. Then uranium, clean energy, lithium, FANGs, ARC innovation, Bitcoin, Ethereum. So you're getting a lot of the growth-oriented, optimistic symbols. And then, again, Coinbase, Squarespace, Robinhood, PayPal, all of your financial disruptors doing well. Microsoft, a really good day, 3.5. Better than Apple, which was at 1.9. So this feels like Microsoft is recovering from its sell-off and is a long-term keeper. All right, let's look at the traders today. Really? Okay, we'll come back to those. All right, here's this is Woj, I think, on the S&P, plus 1.7. Is venturing, is not letting that thing go negative. That's wise. But now he's noticing that the upward move, he keeps taking the COTA 2. Now this one works for him. And he gets 1.7 out of that. That's staying with it and managing risk. And, and clearing a nice profit. So that's pretty good. In his other trading repertoire, down a half in Devon. Um, the stop and reverse was a little slow and gave back some, but he didn't lose money. Quick scratch, quick scratch, quick scratch. There just wasn't much room there. U.S. Steel, he tried the long, but cut it quick. This is the Kata 2 he's got to have. He gets the second leg, but for minus 0.4. NVIDIA had a much stronger move with the growth area, and he gets 0.9 by getting the 2 legs up that were there. Managing his risk carefully through here. And then 1.6 out of Tesla, getting the move right out the gate. So sum of all symbols, 3.3 today. This feels like about the right level of span of control for him. My brother in Coinbase today, this is on 5-minute charts. He gets the breakout from the dragon, automatic entry at 2R battle drill, all out at the peak for 3.3. The next series, he gets the Kata 2 PSAR flip, adds at the 2R battle drill, brings in about 1.7 away from the desk during the grind. PSAR flip, adds at the 2R battle drill, all out when that peaks and rolls over for another 3.4. So that's 6.7. That's about 8.4. Oh, yeah, he did that for me. So 8.4 for the day. And again, you don't got to get all the movers. You just got to manage the ones that you have. So let's go back and look at Tim's. All right, so yeah, Nolan is learning something here about a little bit of discipline and just following the rules. A 2-hour day if he just does standard work. He's still getting the yips a little bit with the jittery action. That's just getting used to the harness. So that's why you got to do this, and you got to account for it in public so you get to feel the feelings, acknowledge them in public, and then just release them. So I like this entry, and that's a great exit, and I love the re-entry more, and this re-entry is fine. That's pretty good right there. I don't think that's so bad. If you tell me you want to get it here because of the PSAR flip and then just trust the PSAR, I also understand that too. And that's sort of the advantage. The other thing I would say too is if you do get the PSAR flip, I think the realistic entry was here. If you treat that as the OR3 and just take that entry and Southern Skin of the Dragon, you're actually pretty good, and that's one trade. This is a good scratch. That's where you got to re-enter rather than the second leg. And I don't mind that short, but as soon as it doesn't work, I think you got to be out here rather than there. So we got a little bit of work to do there, just settling in. Yeah, we saw that one. Oh, yeah, here we go. Here's Tim. The gold miners, after this first move here was nice. And this one it's supposed to fail right away. When it doesn't and goes back above the PSAR, don't stick around for a full 1 hour loss. You could get out here at the 1 bar high and turn this whole series into a positive. Because all that hard work was negated by eating the entire 1 hour loss. And then there just wasn't anything in here while you were off the desk. That's good. And then he notices the Z3 pinch, so he's not trading in the chop. That's an advantage now of having the Z3 lines back on there. This is a good shot, and it just didn't follow through, but I like the fact that you were able to get in on the expansion of the Z3. So I think that's pretty good work all the way through. I just think that these are supposed to work right away. When they don't, you can even think about that as a morning hook and a 1-2-3 exit would get you in here. I'm not offended that you waited to here to get the deliberate entry, but I think we want to not eat the full 1R. The 1R loss should be the worst loss you could possibly take. And if you don't believe in the trade, then you don't want to stick around for the worst possible loss. In Proctor, so he brings home 0.6, but I want you to notice, even when you're off the desk, that's information. We should be short here. Absolutely. But that's a good second leg down, and you did get some of it. Again, this is patiently waiting for the PSAR to reverse. On this, I like getting paid, but you can re-enter here, and then you're in that trade the whole way. With a trailing stop, you should be in that trade the whole way. Let's see, Nolan on Microsoft. I think this is a pretty nice. Here's your OR3 entry. Good scratch. I like the patience of waiting for it to get through the dragon before you get short. Quick scratch. Didn't take a full 1R loss. Patiently waited for the Kata 2 PSAR flip and 1.7. This one right here, when this peaks, you can actually think of that as a second entry. Then if you do that, because you get double exposure, you then should get out right here instead of here. A 2-bar low is fine, and then that second position gives you a little extra juice. Well, first of all, Microsoft is not as manic as Tesla. Tesla, you're still thinking, oh, it's a huge recovery back to 300, so I'm really hoping to see other people come in and get excited because that's resonating with the internal excitement you feel. So you're disinterested in Microsoft. It's just a symbol, and that's why you're able to be. So we've got to take the professional feelings from Microsoft and shove it into Tesla, or just trade Microsoft. Yeah, and that was the difference between Microsoft and Tesla and having the yips. All right, so that is that. Let's look at the weekend reports. Come on, Kenneth. All right, so start with the weekend reports first. Sideways quiet, that's a good thing for the upside. Today's recovery really made the 2-day, 10-day, 30-day, 90-day look backs pretty healthy. So this is, the volatility is giving us good risk on. It's saying chill out. We're above the 200-day moving average, even if briefly and slightly. 100% exposed on ETF2. That's a favorable sign. That shows health and strength throughout the globals. Now we've seen all of those already. We'll look at the blended monthly rebalancing portfolios. Look at all the globals here. Euro-Asia, Australia, Asia less Japan, Japan, emerging markets. That's all globals all the time. Tech, the weakest. Mid caps and diamonds, the two strongest U.S. markets. In ETF 22, we add the XL series. So you see energy and materials. That's where that strength in metals may be coming from. Then you got industrials and finance, and then you see the first broad U.S. index. So this tells you that those four sectors, finance, industrials, materials, and energy, all have the short-term juice. In ETF 32, we add a few more country ETFs and some sectors. Now, silver has been on a tear. It adds China. Now, some of our other specialties like blended commodities, Brazil, agriculture, clean energy. This is why I'm short that one. It's been collapsing. In the world market model, large cap tech, and that's the NASDAQ, is the source of weakness in the U.S. But the globals, all doing very well compared to the U.S. And then Mexico in the Western Hemisphere has the juice. In the sector spiders, here, energy has been the best, and we just saw it getting ready to make its little move. And industrials have been the second best on a consistency basis. Consumer discretionary just getting murdered because of Tesla and Home Depot. If you take a look at the broad asset classes, the S&P strength is at 40, so real estate and treasuries are a little bit better. The only thing much better has been gold. But commodities and oil have been lagging. That's why, to me, this little resurgence in energy actually has some legs, because energy has been beaten down a lot, and now energy feels like it's maybe on the rise again. So I'll be watching for a resurgent energy. In the ETF2 database, all of these that are, green and green, the real leaders, that's mostly your internationals plus silver. And the ones that are in green and white condition, was good, now great, we want to exploit new strength. That leads you to dividend large caps, and then South Korea and Hong Kong. And this cluster here, still mostly the globals. Asia less Japan, United Kingdom, EAFE, small caps, and Australia. So it's the globals have been benefiting. In terms of liquidity and volatility, we're looking at the top 30 ETFs by average daily dollar volume, and then using ATR percentage to study relative volatility. These are very tradable. Biotech, semis, Brazil gold miners, and oil exploration. I mean, energy is not bad. It's above average. Qs and IWM are also not too bad. And now notice this. Notice how volatile treasuries are. You would think that's actually just another stock asset class, and rather than the risk-free rate of return. So it behaves more like a stock than it does bonds because of the trading volume and volatility. All right, shifting to the daily. Dashboard number 1. The min pains, Disney, ExxonMobil, Chevron, and Microsoft. Microsoft, I think, has made a really nice recovery here. There's still a lot of room to grow in Alcoa, and we're seeing some strength coming into metals. So there's still some upside to that. But otherwise, Pfizer, and Procter still weak in healthcare, and Goldman Sachs has some room to make up in the financials. Um, Lots of auto framers available here in the Dow 30. You got a couple 5DDs. You got Boeing and Johnson and Johnson. Both of those, you can make a strong argument that if the market is going to start recovering here, like it started to today, that people are going to be looking at Boeing and Johnson and Johnson as opportunities. So I would be ready, especially in Boeing. We had one break to the upside today in Disney with his little recovery. Now, the globals don't have the same number of auto framers because they didn't fall as far as the U.S. did. So in the ETFs, the auto framers are diamonds at 2.2, U.S. industrials, staples, and U.S. utilities. So the only ones in the ETFs that are auto framable are the U.S. sectors. The globals are kind of already fully loaded. Emerging markets had a big breakout day today, as did Asia less Japan. Quietly getting it done. Well, not so quiet if you've been paying attention. Auto framer, lots of good ones to choose from. Standard work. Daily squeezes. Today's range was large enough that only two, IBM and Boeing, were squoze. That's why, to me, Boeing is a really interesting play. It's a 5DD, but it was also squeezed. Squoze. So I like that. In the regression line fractals, United Health has displaced Tesla in the number one position. So Tesla is slowly healing, even though it's still like a value play. United Health continues to suffer. Nike and Boeing, running away from their long-term fair value. Nvidia has the strength in the semis. This weakness here in oil exploration, oil itself, and United Gas, natural gas, is telling you there's some opportunities still to the upside in energy. It's still early days in that recovery. In the sniper targets, get three stealthy little Godzillas setting up here, and two in the tactical symbol set remains Marijuana and Rivian, stealthy Godzillas. Multi-time frame NDX. Ethereum is really putting in some work. The Bitcoin Trust putting in work. But otherwise, the globals, gold in Mexico, doing pretty well. And now we're starting to see a little bit of recovery here in the Qs. So this could be that slow healing process in the U.S. that's starting to reward the tech companies. So that's where we should be looking for value plays. In terms of trading value, you get that from a combination of consistency of daily moves as measured by a high frog quality number, and then large daily ranges, and we're looking for the average range percentage. When you multiply those two columns together, you get this trading value ratio, and then we rank it by that. So the best reliable, lucrative targets for movers: Tesla, clean energy, Alcoa, Apple, Boeing, Microsoft, oil exploration, and so forth. So these are the top 20 out of the 60 that are on our tactical list. Okay. And I think, this, if we look at some of the longer term market, this looks like a cup and handle. So there will be all kinds of guys ready to break out play. As soon as it gets above 400, this thing can really go. There's your Kata 2 and the slope stat of the of the market, that's ready to go. This sign's pointing to yes, short term, and even the stretch relative to the 200 is pretty healthy now that we're above the 200. The slope of the three regression lines, the longer term healing of the 90 period regression line, you can see that's that kata 2, and it's really ready to go and really to start becoming noticeable. The 30 has made the turn and is healthy. And this last day or two was a nice move in the RL10 slope. So this is favorable. All of this conditions are set for a nice, little kata 2 run up, and all it's got to do is get above 400. And that's right where we are, ready to go. And that's everything I want to cover for today. And we'll get this published and processed. And tomorrow we'll hit the swing trades and the swing portfolio. Most of the swings that we got short on did not follow through today, and so those either scratched or we got a little wedge of some gains. So what I like to do is to start those swing trade. I'd like to be able to swing trade things on a daily, and so I get started with them by looking at the swing trade opportunities on a 30-minute chart and try to grow it into a daily. And then I like to start that position by looking at the turbo trade on 3 minutes for intraday, earn some money that lets me tentatively start a 30-minute swing, and then try to grow that into the daily. It normally takes about 2 to 3 days for the 30-minute chart opportunity, early days, to succeed and then start growing normally. So the ones that we ventured on the short side yesterday mostly got covered today. I think we still got a couple. I'll talk about that more tomorrow. All right, that's everything I got for you today. We'll get this published and processed. So thanks for your kind attention and your patience.